Hello, everyone, and welcome to another Altus Trading live trading session. This is Richard Van Rich here with Jeff Tompkins and Craig Ward in the chat. Well, we got a lot to talk about tonight. I know everyone's pretty anxious about what's happening in the market, what's going on, and we're going to be here tonight to go over that with you. If it's your first time on one of our sessions, you'll realize your microphone is muted. That's how we can only hear Jeff talk. But we do have the Q&A box, so if you have any questions at all, put those in the Q&A box, and we'll get those throughout the evening and also at the end. Now, if you have any questions about your any access to anything about any open live trade alerts, anything like that that's account related, email support@altustrading.com, and we'll get to those later on tomorrow. Now, if you have to hop off for any reason, this is recorded and will be available in the members area, and we'll send out a replay tomorrow. Before I bring on Jeff, just make sure you guys can hear me and see my screen. So if you can, put a 1 in the chat box so I know that you can see me. And while you do that, I'm going to read a disclaimer. Trading securities and options involve risk. Part of buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee that subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. It looks like you guys can't see me, and you hear my, well, you can see me and hear me here. So that being said, bring it over to Jeff. So Jeff, you want to grab the mic?
Thanks, Richard. Hello, everybody. Can you hear and see me okay?
Yeah, we see you. Looking good, looking very stylish there in that black shirt.
There you go. It's Casual Tuesday.
That's right.
Yeah, welcome everyone. This is great timing for tonight's session with the Fed meeting this week, and we're going to be discussing that on our session today. We'll start out by mapping out our key market levels. Obviously, we've had quite a wild ride in January, so we'll
like mushy.
Yeah, we'll be focusing on that extensively tonight. We'll talk about the sell-off that we've been in the midst of. In the Fed, because they're going to be releasing their statement tomorrow at the conclusion of their 2-day meeting. So it'll be interesting to see how that plays out. Last week we talked about the slingshot setup on our session, so we're going to do a little bit of follow up with that and look at using sector analysis to find opportunities in these market conditions. Moshi says I look like a British spy. I love it.
That's what I was laughing at.
Yeah. I don't know if they would take me on their team, but I'm not really.
I think he's fit in.
Oh, all right. Well, if they have an opening, I'll consider it. Yeah, and then we'll wrap up with Q&A. So if you guys, as you know, for those of you who've been on before, we make this interactive. So it's best to put your questions in the Q&A box, or we'll have a little bit of time tonight to look at some different symbols that you guys are interested in following. So we'll give you that chance. If you could put those in the Q&A, that'd be great. Looks like, okay, we're good. All right, cool. So let's go. I'm going to actually see if I can refresh our data, see if we have the updated data from today here.
You know what, while you do that, I wonder if we can ask everybody in the group, like, how do you feel about what's happening in the market? You know, put in if you're, scared, if you're excited, like, I don't know, like, what's the sentiment of the group? How does everybody feel about what's going on right now? So if you can, just pull up the chat box, just kind of type in, what you think. I know a lot of folks have a lot of different emotions when the market sells off. Some people get kind of triggered and fearful, and they start dumping positions. We start trying to go to cash and all these different types of things. And Masco says, have no clue. Yeah, I hear you. Let's see.
Yeah, I read an interesting, let me see if I can pull that up on my other screen. I read an interesting kind of analysis of more pertinent to buy and hold investing, but some interesting stats. So if, and this is certainly interesting in the context of like what we've seen in January, a $10,000 investment in the S&P 500 index over the past 20 years. So looking December 2001 to December 2021. So this is actually wouldn't encompass the sell-off that we're in right now. On average, would have yielded roughly a 9.2% annual return over the course of those 20 years. So that's pretty good, right? That's not a bad return.
Yeah.
But the caveat there, and this is what was interesting, so that return fell by almost half, so to about 5%, for any investors who sold and missed the 10 best days over that period. So out of that 20 years, a very small 10-day window, if you had missed that, in other words, hadn't been in the market, that would have cut that return in half. So it shows how critical very brief periods of time in the markets can be to overall returns and results. And then on top of that, if you had missed, what was it, the 30 best days, so just 1 month out of that 20 years, your average return on the S&P 500 index was 0%. So pretty crazy.
Wow.
Right?
That's crazy.
Yeah, very crazy. So it just goes to show, like, if you're a buy and hold investor, and then what really in reality ends up happening is when we have market conditions like we're in now in January, people panic and oftentimes get out of the market when it's selling off. So they then take a loss or get out at a price that's much lower than any previous high peak in the market. So in reality, what happens, people aren't able to follow through and ride out these significant sell-offs and end up actually underperforming the S&P, even if that's all they invest in. So it's kind of some interesting food for thought. And one of the reasons I really like trading, I mean, as a trader, we don't have to worry about getting number one, getting 20, 30, 40, even 50% of our account wiped out in a brief period of time. But we also don't have to worry about the exposure, right? If we're not buying and holding at times that don't make sense or that aren't opportune, then we have that advantage to reduce exposure when it makes sense, and then get into the market when it makes sense. So, what were the results of your survey there?
You got a lot of stuff going through. It's different. We got Trader Keith saying cautious, taking advantage of volatility with options for reducing capital risk. He feels like the sell-off seems to be overdone. Eric says excited because he can make money bull and bear markets. Steve saying he's concerned could turn into a greater downside because of the break in support levels. Peter saying good time to trade ETFs, going short. Mexico's pretty, like a lot of people, he has no clue. It's just it depends. Like I've got buddies that a lot of older traders that aren't a little more investors, and they call me like freaking out. Like, what do I do? What do I do? What's happening? You just, it's like we've seen, like, whenever we go to live events and we meet folks, especially like a money show or something, we see all these investors that are just, they've been buying and holding for 10, 11, 12 years and have just been doing great. But then, when the market starts to turn the other way, then that confidence just is gone.
Yeah, and last week when we covered the slingshot, I think that's hopefully has resolved that for a lot of you. If you missed last Tuesday's session, certainly check that out. It's in the members area, the recording. I'm still waiting on the data refresh. I posted a commentary before our meeting tonight, so I want to talk a little bit about that because it's related to the Fed. And for you Zillion members out there, you can find that under the commentary and events. So let's kind of highlight what's going on this week, and then I'll try the data refresh again. So in terms of what's anticipated for tomorrow, we're expecting that the Fed is considering the current rate of inflation is ready to raise interest rates. Last year they were talking about maybe more like waiting till June, July timeframe. And now a lot of this volatility you're seeing in the market and a lot of the panic selling is partly due to the expectation that could be earlier and as early as March. So we're going to find that out in more detail tomorrow. But all in all, we're expecting policy tightening, and we're likely going to see that hit the market. So a lot of that isn't really yet priced in. So I think the recent sell-off this month is a result of expectations of interest rate hikes, but as far as overall policy tightening and things, a lot of that could potentially have a longer term impact on the market. And as we look at our indices, at the S&P and the Nasdaq, we're going to look at peak to trough sell-off. Where are we as it relates to recent previous all-time highs versus the trough that we hit yesterday. But interestingly, yesterday and today we've had these major moves down, but then again, due to the volatility and things, we've reversed significantly. And yesterday we reversed back. We were down, as we'll look at on the chart here. I think the Nasdaq was down over like 4%, and then reversed up and ended up closing positive for the day. So I expect we're going to continue to see that volatility moving into tomorrow for sure. And it does release the final statement tomorrow, January 26th. But basically the consensus is that we expect them to take steps to fight the high inflation that we're seeing. Again, the inflation levels now are as high as they haven't been that high since the early 80s. So just as an FYI, I expect to see higher than normal volatility in the markets certainly tomorrow, even through the end of the week, and then depending on what the reaction is to the statement tomorrow, I think will give us more of a medium to long term window into what might happen with the markets. So again, that's posted in the commentary events. So let me try to refresh again here. If not, we'll just go over to the TOS platform. I'm still waiting on the data refresh. Our team might be making an update there behind the scenes. So I will just go ahead and go over to TOS and we can take a look. So on the S&P, previous all-time high was just at the start of the year, January 4th. Let's see, the trough yesterday, so the low on the S&P, it hit at 42.22 and some change. So that was about a 12% peak to trough. So how do we interpret that? Well, and I'm just going to go ahead and shut off my. Oh, you shut my video off for me, Richard? Thanks.
I hooked you up.
All right, sweet. That way you guys can see a little better. So the peak to trough here was about a 12%. So the way that we interpret that is anything 10% or greater is considered a correction. And so we went in the official correction territory in the S&P. If we exceed 20%, that's where the general consensus is we're in a bear market, right? So we're not yet in a bear market based on this sell-off, but this is a big change in market structure, right? So quite significant. So in terms of mapping out levels, one thing to note here is this 4250. And actually, I'm going to mark it more as a zone. So 4,200 to 4,300. And what's somewhat encouraging here is we had rejection off today off the 4,300 level, and yesterday around the 4,200. So in that kind of 4,200 to 4,300 zone, 4,300 is the strongest century mark that we're watching closely. So this is a potential indicator of this sell-off potentially slowing down or reversing. We'll look at that in the context of the VIX, the CBOE volatility index. And then we've obviously got some buying and selling pressure around this, and mainly buying pressure around 4,200. And it's positive that we didn't, break that and close below. If we break 4,200 and close below, that's going to greatly increase the likelihood of a bear market. So watch that 4,200 level on the S&P. And then let's take a look at the Nasdaq. So the Nasdaq, we are in a bit of a different picture in terms of market correction. So we are, of course, in correction territory on the Nasdaq as well, but much closer to a bear market. So the peak to trough on the Nasdaq, so the peak was back here in November, and then of course trough yesterday, was much closer to bear market territory. So that was about an 18% drawdown from the previous all-time high to the low from yesterday. And so this is a good line in the sand for the Nasdaq and analyzing market conditions, because it based close to a bear market territory. So we know if the Nasdaq trades much below this the 13,700 level, we're going to be in a potential bear market in tech. And that level is significant here. We see some major support and resistance. The 14,000 level is also, especially in the context of today's price action in range, is also a very important one to watch. And you can see that we stayed above that level today, but was previous resistance, and really led to the breakout on back here in May and June last year, and led to these higher prices here. So those are the two ones to really watch here for the rest of the week: 14,000, and then around the 13,700 level on the Nasdaq. And so when we look at this in the context of the VIX, because the VIX is such a crucial tool for helping us evaluate when these sell-offs may be losing steam and turning around. So we always want to look at the peak spike on the VIX, which was yesterday, and close to 39. So I'm going to actually load a little bit more data in here so we can see what this looks like. So yeah, here's this major spike. So this close to 90 spike on the VIX from back during the Corona crash in March of 2020 resulted from about a 30% peak to trough sell-off on the S&P. So we're a long way from that, of course, but you can see what a difference that makes in the price level of the VIX. So here's what we want to look for. We want to look for the VIX retreating off a resistance area, right? So you'll often find that these spikes occur at similar levels from past sell-offs, right? So this is why it's so important to watch. 45 is going to be, if we get further a downward movement in the market, is going to be the next major level to watch if this high from yesterday around the 39 level is broken here. So one indicator of a potential, that this sell-off is losing steam and we may see a reversal back up, is the rejection of this resistance level around 38 here, 38, 39. I'll just call it the 38 to 40 zone right in here, because those are really the peaks that we've seen, other than this kind of one outlier from June of 2020 after the initial crash in March. Those are the resistance levels that we've seen during these sell-offs. So that's going to be really important to keep an eye on. So what we want to monitor is, does the VIX stay below 40, and then is it retreating? So if we see the VIX retreat back to the downside, then in combination with the S&P moving up, that can be our indicator that the sell-off could be turning around. So those are the major levels on the VIX. But when we look at that in the context of the S&P, so as we mapped out those levels, we see that the S&P reached a support level as we mapped out. So the 4,200, 4,300 zone here. And then we see a big selling pressure into that level, and then bulls coming in and reversing price back up. So this actually is a good indicator that if we can stay above 4,300 on the S&P, and the VIX starts to move back down as it did today, then that can be our indicator that there's a higher probability for a reversal of this sell-off. And these are the techniques I use to identify that and get into the market at lower prices before it rebounds. And so we also looked at that using the slingshots set up last week. So if we add on our volatility bands, and we want to use those to indicate where the market, once the rebound happens, right? Because markets don't go straight down, and the S&P is eventually going to go back up. Then question number 2 is, where is it going to go back up to? And what we believe is that the market will return back to, at a minimum, back to the breaking point, or the volatility expansion or breaking point of that lower band. So that would be between 4,550 and 4,600. So that's our major line of resistance. But once this sell-off turns around, that's where we would be looking for price to return to, is this, call it 4,575 level here. So currently closed at 4,356 and change on the S&P. So that could be a really nice move back up if we can hold these lower support levels. So any thoughts, questions? I think mainly the takeaway here is, this is for any of you bulls out there who are waiting to jump back in, or looking for an opportunity to buy at good prices. This is, I would say, positive price action for bulls right now. And then what would be negative is if we break those support levels we mapped on the S&P and Nasdaq, and that can then create a lot of opportunity for more downside selling pressure.
Are you looking for it to close below the 4,300 level, or are you looking just for it to go back in and, wick through it?
I would want to see a close below.
Yeah.
A close below 4,300, or you can use the actual low price lows from the day's range. I mean, today's low was actually 42.87. So if it closed at 42.95, that wouldn't qualify for me. I would really want to see it close below the actual price lows from the range of that particular day. But definitely the low from yesterday on the S&P was 42.22. So being that that's so close to a century market, 4,200, I'd really want to see a close below 4,200 to tell me that we could be heading, transitioning from market correction to bear market. And again, that would be 20% peak to trough sell-off. So we need to, I'm every day I calculate that. I look to see, where are we in terms of peak to trough? So I'll just run through that for you real quick. So the previous all-time high here on January 4th was at 48.18 and change. I'm going to eliminate the decimals. 48, and then the low from yesterday was 42.22. Oops. Sorry, we want to subtract the high, the low from the high. Okay, so we're peak to trough. So from the high to the low, excluding the decimals, we're down 596 points from high to low. And if we divide that into the high, which again was here on January 4th at 48.18, that's a 12.37% peak to trough. Okay, so since we're above 10%, we are technically in a correction, but it would need to get to 20%. So we're talking about, quite lower prices. We're looking at down here to get into bear market. So we have, if the markets don't reverse off of this zone here that we mapped out, we've got, quite a ways to go on the S&P to even get down into bear market territory. So there is, if these levels don't hold, there is quite a bit of room to run before we even hit bear market. So something to keep in mind here. But keep an eye on the commentary events in the Zillion dashboard. I'll be following these numbers closely and posting in the commentary, so everybody's kept in the loop on where things are based on, because there's just a lot of unknowns right now. We got to really see what happens tomorrow with the Fed statement and then how the market reacts around these levels. So right now I'm not jumping into anything position wise. I did well. I shorted the Nasdaq, S&P and Russell E-mini futures on this slingshot on the sell-off, and did really nicely with that. But right now I'm out of those positions, and I'm flat. And also in my hedge fund, I'm not entering any new positions until I see what happens with the Fed statement and how price reacts around these levels that I mentioned to you in our session. So that's really what I'm keeping an eye on. So I don't want to jump in prematurely. I'm really waiting it out. So now's not the time for me to get in to the long side or the short side until I see what happens. But the nice thing is the market's really given us some good clues to keep an eye on. It's yesterday and today were a bit challenging, right? Because of the extreme volatility, but that's okay. It gives us, clues. It gives us levels to watch in terms of, how things proceed. So the slingshot, if this ends up being a turnaround point, again, it began here. If this support holds, then we've got a slingshot up back into the 4550 to 4600 level. Now, if that, as I pointed out in our previous sessions, the more conservative trader may wait for that slingshot to actually play out and then see if price breaks the initial volatility breakout level, which would be around the 4575 level. If that occurs, then we've got, that opens the door to moves back up into the 4800 level. So there's kind of two ways to play that. And again, we covered that in our session last week. So some definitely, that's why I love these sell-offs and all this volatility, because definitely got some nice opportunities on the horizon, depending on whether you're, bullish or bearish. Any questions there? I'm going to go ahead and try to refresh our dashboard again.
Yeah, a lot of people are putting in the chat box that the slingshot strategy is kind of perfect for what's happening right now for them.
Sorry, say that again.
No. A lot of people are saying that in the chat box that the slingshot strategy is kind of perfect right now for them.
Oh, yeah.
Watching it.
Yeah.
A couple general questions. Steven's wondering if we're likely to see trade trend give us a warning for the reversal.
Yeah. I would expect, let me, if this level holds, and price begins to move back up, we would likely see a buy signal from trade trend. Some of the sling, that's always added confirmation for me if I get a buy from trade trend off of a sell-off in the slingshot. I don't necessarily always wait for it. I also use the horizontal support levels like we've talked about, but definitely if that comes in, it's added confirmation for me that this could turn around. But I really combine the trade trend buy and sell signals with horizontal support and resistance, respectively. So that's when used together, I think a very powerful tool.
Yeah, he's got a follow up. He's the type who doesn't like to short indexes or stocks. He says, any short ETFs you recommend, or should I buy put? So for some folks out there that are wondering kind of how to play this, since volatility is really high, they're wondering if they should buy puts or
yeah,
sell
so
calls, or
yeah, good question. So slingshot, can be a good indicator if you do hold any long positions to hedge. But the VIX, that's a great question because the VIX is really crucial. Let me just add a trade trend on here real quick. For insurance, I mean, the VIX is really an insurance product. One of my buddies, Mark Sebastian, if you guys are familiar with him, he was one of the guys that actually was around and rolled out the CBOE volatility index product. So he was there when the VIX was rolled out, and is considered, like Jim Cramer and a lot of the Bloomberg shows have him on as a consultant and analyst to talk about the VIX because of that. And so he's a really well-versed VIX guy. And so what he would tell you, and I would say the same, is it really is, because it's often called like the fear gauge, or used to indicate whether there's fear or greed going on in the market. And while it does do that, what it really truly is, and why it was created, is it's an insurance product, right? So it's there to allow you to insure your portfolio. And to me, that's really powerful when used with the trade trend indicator. And we've covered this in past sessions too. When you get a buy warning at on the VIX at a level below 20, that can be a very, and you just look at the last two major sell-offs, the one that we had in November, December, and then this one in January, and take a look at what happened here, right? We got a buy warning in November, and then we got our buy warning in early January. And look what happened to the VIX right after. And as you guys probably know, it's inversely correlated with the S&P. So these are, when the VIX is spiking, the S&P is going down. Well, talk about, everyone says, I'd love to have a crystal ball. Well, talk about a crystal ball effect here. Like, you could have known before the VIX even spiked above 20 that the market might be vulnerable to a sell-off. So it's anytime you see a VIX warning, and these are pretty good timing. But if you start to see multiple VIX warnings below 20, you should be on high alert. Yeah, your radar should be active and looking for, especially if these come in after we're hitting new all-time highs in the market. This is your warning here. Really, we had several weeks of warning before this November, December sell-off last year. We got a nice warning here on, what day was this? The 4th, the 5th, before this recent sell-off. So I use this religiously. Like, if I see these trade trend buys warnings below the 20 level, and there's follow through. So that would mean that trade train, the algorithm gives you the buy entry price. So that would basically be the VIX trading above the buy warning here. That occurring below the 20 level is telling me there is a high probability of a market sell. So I was fully ready for this in January, right? I was fully ready, and that's why I shorted the E-mini futures and did really well this month doing that, because I was alerted early in January. And so it's really important to use this. So in terms of as an insurance product. So in terms of using the VIX as insurance, there, to answer the kind of circle back around to the question, is the is we can use this, and I use it in different ways, but I may not necessarily trade the VIX directly. It kind of depends on what you guys trade. So what I do is I wait for this to occur that we just analyzed here on the VIX, and then I'll look at using it shorting index futures. That's one way to do it. If you want to use the VIX directly, you can buy calls or set up a vertical call spread on the VIX, because you can't trade shares of the VIX directly. It's only options, right? So you could look at on something like this, going out 30 days and buying calls. Because remember, the VIX is a measure of expected volatility over the next 30 days that is priced into the options market. So I generally would go out to the next month's expiration, 30 days out, and you could buy calls. That would be your insurance. If you have long exposure to the market, I generally don't use the VIX purely for speculation, and I don't generally advise or recommend that people do that. I use it more for an insurance gauge, right? Do I need to buy insurance if I have long exposure in the market, or not? And that's one way I do it. I also trade the VIX options as more of an income-based strategy. So I sell VIX calls. Now this is, would require approval from your broker and potentially a higher degree of margin, but I sell naked calls on the VIX. In fact, I sold one yesterday at the 40 level. I waited, I saw, clear this out. I saw the VIX spike up to 39. I knew that 38 to 40 zone was a resistance zone on the VIX, like we looked at just a little bit ago. So when it hit that level, I turned around and I sold 40 strike VIX calls, and the VIX now has rejected that level and moved nicely below it. So I also sell calls on the VIX after a VIX spike, like we saw yesterday and today. Now, if the VIX were, the sell-off continues and the VIX, goes through 40, I'm going to have to monitor that and either hedge with a long call or be ready to roll that if those VIX options expire every Wednesday morning, so that it's based on the Wednesday morning open. So I basically, on Tuesday, today's my day, I'm watching to see, did my previous week VIX calls, if I had any open, are they going to safe to close out of the money? So there are some adjustment techniques built into that. If I sell VIX calls, that include basically rolling, working the strike down, so rolling down and out, and potentially adding to the position. So it's a little bit more of a advanced complex strategy, but it does require higher level of options approval to do, but that's one way to do it. If you're just buying calls for insurance, that can be done with the level 1 options approval, right? You're just buying a straight call. So that would be another way to play these and use it as an insurance product if you have long exposure in the market.
Kind of a follow-up question. A couple people have asked in different ways. Is there like a number that you feel like once the VIX drops below it, it signals much more of a possibility that we've bottomed out and looking to head back up?
Yeah, 20.
20 is the number.
Yeah, so like if you go back and look at At least 20 is it doesn't have to be like actually below 20, but if we're like these places here where always look at the VIX in the context of the S&P. That's my biggest takeaway here is what is the VIX doing as it relates to the S&P, but you might see it like price kind of move around the 20 level. You'll see a lot of rejection off of that if we're below 20. Or as a support level after a VIX spike. So if the VIX comes back down to 20, you may see that serve as support. But the key thing to watch is for rejection off of these other levels that we mapped out. So in terms of timing it with a turnaround after a sell-off. So when you see it rejecting these major zones, right, that we looked at, that's what you want to watch out for. And then you want to wait for the VIX to retreat and go back into the 20 level. But so it doesn't have to get back below 20 to tell us the sell-off's over, but we want to see it move back down. So like if we look at past examples, right, you'll see, and that's why it's important to map out these higher zones. So you'll see here's another VIX spike close to the 38 level, and then you want to watch for bearish action on the VIX. So you want to watch for red candles moving back down, and then go kind of a little exercise, homework exercise for those who are interested in using the VIX. You look at that in the context of what happened on the S&P. So if you can spot these reversals off these levels on the S&P or on the VIX, I'm sorry, and then correlate those to sell-offs on the S&P and then a subsequent turnaround, that's going to give you probably the most advanced clue you can get in the market. Quote unquote crystal ball, so to speak, to what's going on. I mean, that's how I use the VIX. And then, as I mentioned, certainly coupled with the trade trend signals, that's going to give you a lot of power in preparing for these types of market sell-offs. Again, we had 3 of those. October, we got the earliest warning, again, early November, and then mid to late November, and then boom. Okay, this time we got 1, but it's still, I mean, look at this warning on January 5th, the VIX was still below 20. It closed below 20. So it's not like we would have gotten caught in the middle of that sell-off. We had a pretty darn good advanced warning. So in that context, I don't look at the trade trend sell warnings quite so significantly because it's such an extreme shift in volatility. The algorithm isn't going to pick up the shift back down on the VIX quite as well. It might do a better job like on the actual S&P or the Nasdaq or whatever index you're looking at, but often it's a bit too late by the time the algorithm picks up the shift in the volatility, because it's a volatility in a product, right? So when you get such a drastic shift in volatility, the VIX can spike up, 30-40% and then reverse that in a matter of a day. It's going to be very difficult for an algorithm to pick that up. So I don't use that the cells quite as religiously. Instead, I use the levels that we mapped again. So the 20 is the real line in the sand for volatility. Let me just zoom back out here again. I'll map these out one more time real quick. All right, so 20, and then 25. That would be kind of a more like definitely not in correction territory, more of just maybe a normal retracement within the context of an uptrend potentially. 20, kind of that 28 to 30 level is also one to watch. 35, and then 40 to 45. If you see the VIX go above 45 to 50, like it did back during the Corona crash, that's where we're in a very, very as it relates to the S&P, a very low price range on the S&P, these can be very, very good buying opportunities. If I see the VIX spike up in the 90 again, I jump in and buy the SPY or buy options on the SPY. You could buy a leap on the SPY, go out 12 months. That's going to be a very high probability trade. If you see a VIX spike into this level or really above 50, buying a leap call option on the S&P can be it gives you a year, can be a very, now the problem is, volatility is high. So the options are going to be expensive. So you got to be a little bit cautious about that. But one way to overcome that is to buy a call spread. So you're buying a call option and selling a further out of the money call option to help finance that and reduce the impact of volatility crush. So again, a little bit more of an advanced concept, but one way to overcome that. So they, certainly buying like a call spread, call debit spread on the VIX going out, longer term is going to be a very high probability trade on a major VIX spike. So those are kind of the levels that we want to be watching. And you can see as you draw these out, how often price reacts around these levels. And that's why you see these major spikes, followed by rejection and then a move back down in the VIX, because basically what's happening, in real life is people are coming in and buying on these major sell-offs. So that's kind of the contrarian opposite reaction that institutions have versus the retail trader. So generally, the retail trader is panicking and selling, and they're basically selling to the institutions who have the financial wherewithal and resources to ride these things out and buy from the panic sellers at lower prices. And that's what then drives price back up. That's really the fundamental, the fundamental rationale behind the slingshot setup. That's really, why I created the slingshot for our members, is to show them what is happening with institutional buying, because it's the panic sellers, the retail traders, who are selling at, taking losses and selling at lower prices to the institutional buyers. And that's what, pushes prices back up in the market.
Show had a general question. Would you consider Diamond's DIA being slightly stronger, the four indices?
DIA?
Yeah.
Oops, let me get my cursor here. Yeah, so, well, this was, of course, so it's kind of like the SPY, like it's an ETF that tracks the Dow. I think that, other than price difference, the reaction should be fairly similar to the Dow. So I wouldn't say it really gives you any leading information that you wouldn't get from just watching the regular Dow, if I understood that correctly.
Yeah. I used to do like iron condors on diamonds like 10 years ago.
Yeah, a lot of people use them. Yeah, like the IWM, and a lot of the index ETFs are used for iron condors. Well, on a dollar basis, they trade low, at a lower price point. So, but like, for instance, like the DIA, if you look at the percentage change from today, it was minus 2.5. Well, let's look at the Nasdaq's always good because it's, but it shouldn't. So like, if you look at the Nasdaq closing down 2.48%, the QQQ 2.32%. So it's going to be a little bit different because on a percentage basis because of the difference in price. But overall, all else being equal, you shouldn't see much of a difference there. Let me see here. I saw something about the VIX on. See if our data refresh is a little bit delayed today. Let me see if it's okay. Oh, they're finally updated. Yeah, the VIX. So if you just go, somebody posted a question about the VIX and Zillion. So yeah, if you just type in VIX, the drop down should show you the CBOE volatility index if you just click on that. But the symbology is basically that up arrow followed by VIX. You can see the VIX in here as well. Chris, so we're doing some updates to the algorithms in Zillion because what's a bit different from our trade trend indicator in the broker platforms versus the Zillion dashboard is we have 3 modes. So we've got conservative, moderate, aggressive. We did some updates to the algo to the conservative and moderate mode that had some impact on the aggressive. So what we're doing right now is we're shifting. The conservative and moderate will stay the same as is, but we're shifting the aggressive mode back to match the broker platform algo. So that's in the works. It should be done here fairly shortly. So that's why you might see a little bit of difference. But when you want to look at the broker platform algo versus the Zillion dashboard algo, those are going to match up between the aggressive mode on Zillion and the broker platform algo. So we should have that finished shortly, but you'll see a little bit that's being worked on. We did some different updates on these modes. So that'll be, that's in the works.
There was the optimized trade trend because there's now the divergence cloud intersecting with it. So they made a few little changes, but
yeah. So yeah, we'll have that updated here shortly. Yeah, hey Manchu, good to see you on. Been wondering how you're doing. Yeah, we do post the regular alerts in Zillion for commentary and things. We are going to start sending out a daily newsletter, I think starting next week. So we'll also post some alerts and things in that, Manchu. So if you want to keep an eye on that. Steven, Zillion is our own charting product. We have created this with our development team. So yeah, this is our product. It includes trade trend. Currently includes trade trend and divergence cloud. So like if you look at the S&P and you'll see there's like clouds here that tell us spot divergences in the market and help us easily identify uptrends and downtrends even ahead of time. So like you can see that we've been in a red cloud here as the S&P went into a range, and we remain in that red cloud during this very long uptrend. We were in a nice green cloud here. So that's the divergence cloud. Those are the 2 core indicators of Zillion. You get your divergence cloud and you get your trade trend indicator, which, as I mentioned, comes in 3 different modes. So you get conservative, moderate, aggressive, and you also get market sentiment. So you have your risk trend, buy-sell ratio gauges, sector performance, which I was actually going to highlight here in just a second before we wrap it. And you get all your commentary and events. So that was the one I went over at the start. If anything major is happening in the market, that's posted in our commentary and events. Any upcoming things like our live strategy sessions, as you can see, tonight's sessions posted in there. You get the full scanner, watch list functionality. We cover a lot of markets. We got ETFs, all the major indices, forex, crypto, cannabis, futures. So that's all included. You get the charting, and you also get the full suite of all your standard indicators. So we've got hundreds of all your basic indicators incorporated here. And we're actually going to be fully launching the Zillion dashboard next month in February. It is still available at the early bird release special. So you can go to zilliontree.com. We're offering a 50% off lifetime grandfathered subscription. So only $49 a month, and you get the Zillion dashboard by going to zilliontree.com. So the nice thing about that, the early bird special, is Yeah, we're still kind of working through some things. Like we're working on getting that aggressive trade turn algorithm to match the broker platform algorithm. So there's little tweaks being made here and there, but you get it at 50% off, and you get the full suite of indicators and features. So it's basically going to be our premium package at 50% off. What's probably going to be the basic package level. So it's a good opportunity to jump in. We also have statistics. So like you can look at any stock and run statistics on, any of our symbols that are loaded in. And again, like you can look at like cryptos, and you click on anything in the watch list, if you want to look at like Bitcoin, and it'll populate your statistics based on your aggressiveness mode. It even shows you the days that are most profitable, which is versus those that aren't. Compares long trades to short trades, gives you a profit factor, net profit. And so it basically gives you an immediate back test of all the features here. So a lot of really cool stuff built into our dashboard. And this is what myself and the team uses to analyze the markets and find opportunities. So yeah, energy, as I mentioned, it also gives you the top and bottom performing sectors. So this can help us spot opportunities, even sell-offs, because actually right now energy is performing fairly well. If you look at a lot of if you just simply click on that, it's going to populate your scanner with all the energy stocks. Even though the market's tanking, we got energy stocks that are up very significantly. And we can then sort those and look for buy and sell signals and different things. You can sort by buy entry, if there are any buy pending. Right now there aren't any, probably because it caught them days ago and then they're already open. But yeah, that's all included. Our underperforming, obviously, technology has gotten hit hard. Consumer discretionary, communications, number 3. But you see, basically at a glance, exact where the money is being made and where the money is being lost, if you're long or short, respectively. And then you can then scan based within those sectors to find opportunities using the trade trend signals and divergence cloud. So really cool tool. And then you get your snapshot of the major markets, the S&P, the Dow, and the Nasdaq. And you can see quickly, what the short, medium, and long-term trends are, what the overall market risk is. So this is actually a really good tool for spotting turnaround. So we want to see, the market risk gauge has been rising. It's at 31.16. We want to see that start to fall back in the low risk. So this middle bar here to even the lower bar to help us spot turnarounds in the market. And this is refreshed every day, right around 7 p.m. Eastern for equities. Stephen, I still place my, it's something we're looking at moving forward. We may have broker integration with Zillion. I would say it's a pretty good chance down the road, but it's a charting and analysis tool. So I still place my trades with TD, Stephen, but I just use this as my analysis tool and then go ahead and enter my orders. But in terms of the trade trend indicator, yeah, I like to use the Zillion platform. I still use it on TOS, but I like it on Zillion because the difference here that's not available in the broker platform algos is I can toggle between different modes. So like if risk, just to give you an example of how I do that, if risk is high, I don't want to necessarily be in aggressive mode. I might want to be looking at moderate to conservative mode. If risk is low, then I might want to be looking at the aggressive mode. So the nice thing is I can toggle between those really quickly, and everything updates based on that mode, all the stats, all the charting, all the signals. So yeah, it's a really, really handy tool. And I like to be able to see at a glance, top performing, underperforming sectors, and just be able to click on those and find opportunities. I mean, it just makes my life so much easier. I can spot these very quickly and then go enter my order with my broker. So it's really a platform agnostic tool. It doesn't really matter what broker you trade with. You can really use it with any broker. But eventually we are looking at broker integration. So like potentially being able to place a trade within the platform and then have it automatically executed with your broker so that you're not having to like switch back and forth. So
Yeah, it's just the beginning, guys. There's so many things we're working on and have planned for a zillion. We've been taking your feedback, and I think Peter just made a nice compliment that it's been looking good. And notice over the past few months we've come a long way, and really we've got a long we plan on going. We really don't feel like we're just going to stop and say, all right, zillion's perfect, but we're still going to keep listening to you guys and making changes and trying to make it as easy and clear and fun to use for you guys. So yeah, we're going to keep it going.
Yeah, absolutely. So yeah, again, zilliontree.com if you guys want to get in on the early bird release. We technically sold out of those, but we had a lot of demand, so we reopened the early bird, and we're gonna hold that through the end of this month through January, and then we may take down the early bird, and then our launch is anticipated for third or fourth week of February. So the price will be going up from there. So there's a good opportunity to get in at only $49 a month, and then again you get the full suite of the full package. So you get the full suite of indicators, the premium package at a really good price. And then we don't have any contracts or anything like that. It's just, whenever you want to use it, it's there for you. So I just realized how quickly time went by. We didn't even have time to look at any symbols. It's already 8 Eastern. Are there any other general questions? What I'm thinking of doing is, since I feel bad, I apologize, we didn't get any individual symbols that you guys wanted to take a look at. Of next week's session, just kind of really focusing on an interactive session, and just really like looking at things that you guys want to look at in terms of symbols or trade trend signals, divergence cloud, and trying to help you guys maximize the time on looking at things that are specifically pertinent to you, with the caveat we can't give trade advice, but I'm happy to provide my analysis of the picture that I see going on, and how I might interact with that. So if that sounds good to you guys, we can do that next week on our next live Tuesday session. We should have a clear direction of where things are going, I think, next week, after the this major week of Fed meeting and a lot of earnings, which, by the way, Microsoft did do well. They released their earnings today and beat. So I'm actually watching the Nasdaq, or the futures, and I'm looking at the Nasdaq futures and S&P futures. We are up a little bit, so we'll see where that goes tomorrow. But again, expect increased volatility tomorrow. It's going to happen. And just be cautious. I like to wait for these things to die down and be patient before I make any major moves. So
I think I can speak for everybody out there, where it's like, we, in light of what's happening in the market, I think just you giving this really in-depth commentary on where things are looking, where they're possibly going, how to really what to really look for in order to really signal a reversal, and how to play those, and where it could go back to. I mean, all that information is really gold. I mean, I think we can all, especially as we watch the replays, if you have to, and really let this kind of process. I mean, I think you've really probably done incredible amount of helping for everybody out there. Just me as a listener, appreciate it, and think it's definitely needed and necessary in times like this to have somebody to guide us through and kind of give us ideas of what to look for. So yeah, I think I don't think anybody's disappointed we couldn't look at Amazon or Apple. I think having an idea of where things are going is probably most supportive for us all. So
yeah, definitely. So, well, thanks for that, and really appreciate everybody joining and being such great members. Thanks, Jeremiah. Thanks, Peter, Stephen. You guys are awesome. I'm glad it helped. And so thanks, Shoba. And thanks to Richard and Craig for moderating and manning the chat. Awesome guys. They're always there to help you guys if you guys have questions or need anything. And look forward to seeing everybody next week. We should have the recording posted up by tomorrow. So if you guys need to review anything we covered tonight, that should be there for you guys. But I hope you guys have a great rest of your night. And we will see you guys next Tuesday, 7 p.m. Eastern, same time, same place. Thanks, Rosemary. Thanks, Micah. See you guys.